Okay, let's do one thing. Let's put the focus on the pharmaceutical space now. Dipan, just hold on for a tad bit. Nithya Balasubramanian, the Director, Healthcare at Sanford Bernstein, joins us now to talk about a lot of companies that have come out in the, with their results and the way forward for their businesses as well. Nithya, hi, good morning. The two stocks that stood out for me this time in this earnings season is Torrent Pharma and Mankind. Both reported very good set of numbers. Torrent saw, almost a 20% revenue growth. It was a profitability this time compared to a loss earlier. And Mankind, in its first, results post-listing, delivered a superior performance. Qualitatively, how do you like these companies now? And do you see, better earnings in the quarters to come?
So let me clarify that I do not have official coverage of either name, so only qualitative comments, therefore, on the results that were published. See, I think Torrent numbers were better than expected. They do have the backing of a very strong branded generic exposure in India as well as Brazil. And both of these markets, in both these markets, they posted pretty impressive growth in the last quarter. And I think, interestingly, Germany also saw some recovery, and they have commented that this market, they have won some tenders, and therefore they expect the traction to continue. US is flattish, but I think that is something the market is already expecting. I don't think there is much value that's being attributed to the US business. I think the challenge with Torrent Pharma, though, is the multiple. I think the multiple is is at a significant premium compared to pretty much the rest of the companies in the street. At a 30x 1 year forward PE. You are already pricing in that Torrent will be able to consistently do double-digit growth for the next 2-3 years. But otherwise, we think it is a stock, given the fundamentals, given the chronic exposure in India, given their track record with previous M&As, I think they should be able to grow at or above market rates. Coming to Mankind, sorry, you had a question?
Go ahead, please.
On Mankind, I think, again, top-line growth was pretty impressive. Even when we look at IQVIA data, I think they have substantially outperformed the market. Margins is where it actually slid down by almost 400 bips compared to FY22, led by one, of course, API cost increases, freight cost increases, and the SG&A cost normalizing, as well as a lot of people that they've added on the ground. Going forward, though, I think the management did guide to recovering that lost ground. They said in the midterm, we can actually move back into the 24 to 26% zip code. And that's the reason to play the stock for, right? So they've got, fundamentally, they're strong in acute therapies. They're strong at the bottom of the pyramid. And their performance in chronic therapies is, in certain categories, is pretty impressive. And as they continue to expand, there'll be leverage on the people that they've added on the ground as well. And broadly speaking, not just for Mankind, I think for the entire sector, they were all still sitting on high-priced API inventory. Most companies like Alchem, Mankind, all of them are guiding for benefits to be realized of the API prices having come off in the subsequent quarters. But I think we might just have to wait till 2Q for us to see the gross margins improve.
Hi, Nithya. Good morning. Nithya, I recall you had a tactical buy on Biocon. What's the call right now at around 245 rupees?
I'm sorry, it was not a tactical buy. It was more a structural buy for us.
All right. Apologies for that.
We had market perform on the stock since we initiated about 3 years ago. Last month is when we actually upgraded the stock. And the upgrade is actually a lot to do with some structural changes that we're seeing in the US biosimilars market. So far, your big pharma specialty companies have walked away with dominant market share. We see some of them as stepping back and therefore creating room for incumbents like Biocon, Celltrion, and Samsung Biologics. We also think that interchangeability, which was a little bit of a challenge, and therefore the US market actually required a lot of commercial infrastructure investment. We think as interchangeability becomes a bit more mainstream, that requirement will come off and therefore help somebody like a Biocon get higher market shares than they were able to before. And specific to Biocon, we think two products, biosimilar to adalimumab and biosimilar to aflibercept, we think are near-term opportunities. And of course, Aspart as well, slightly smaller, but still interesting. But these three products, we believe, will play out as earnings catalyst in the near term for Biocon.
Okay, on Sun Pharma, you have an outperform with a target of 1,223, but the management on the call said that they are expecting only a single-digit top-line growth, a high single-digit top-line growth in FY24. Do you think that could be a bit of a hindrance for the stock? And what's your view now?
See, they started off last year as well with a high single-digit growth guidance. They ended with about 14%. I think Sun Pharma, the management usually tends to guide a little conservatively. And we believe that one, in India, given that they had added a lot of people on the ground, I think they'll realize the benefit of that. We're expecting them to grow slightly above market rates. In the US, we think specialty traction will continue, something that they said on the call as well. And that's the reason we believe they'll actually be able to do double-digit growth. I think from an optical perspective, though, because the market is, if you look at consensus numbers, consensus is pricing in double-digit growth, right? So I think just like us, I think the rest of the street also feels that the high single-digit growth guidance is a little conservative and they could potentially do more, which means when they do hit those numbers, the headlines are going to read like inline numbers, they met street expectations, rather than, better than what they guided for.
Sure. The other thing that's perhaps playing out for companies like Sun Pharma is this whole China opportunity, right? I mean, they received an approval for the for the drug in China. And I understand that China could be the largest market for Illumia outside of the US. Are you factoring that into your earnings estimates as well?
So it's not in our numbers. We actually looked at the opportunity pretty closely. So we had worked along with our China healthcare analysts to look at the psoriasis market. We believe that IL-23s, in fact, within the psoriasis market itself can be almost $1 billion market in China by 2026, 2027. But unfortunately, it's as competitive as it is in the US. In fact, more competitive because some Chinese companies also have their own IL-23s and they're participating in the market. Sun is actually registering their 100 milligram drug, which is the one that they registered in the US. Which is a little disappointing because their 200 milligram actually had better data, which is why in Europe they were actually doing much better. But they're still going after 100 milligram in China. So the data, they still have to publish the data. But based on what we have seen before, it's a little less competitive than the other IL-23 data that we've seen. CMS Holdings is their commercialization partner in China. They do not have the strongest dermatology commercial muscle. Right? We know of other companies that have much stronger feet on street and much stronger equity on the ground in dermatology. So we do not see this moving the needle, but given that we think it's $1 billion opportunity, even with a fairly conservative market share, it's a $50 million incremental sales.
Got it. All right, Nithya, we'll leave it at that. Thanks a lot for joining in and appreciate your thoughts.